All right, let's jump right in. What happens when a company gets absolutely hammered by a huge political attack? I mean, your first thought is probably disaster, right? But what if that attack is secretly the best news you could possibly get? What if it's actually the ultimate bull case? Well, today we're going to unpack exactly that, looking at Goliath's big gambit against the Chinese EV maker NIO. And this is the accusation. I mean, listen to this. Not some whisper in the hallway, but a full-throated shout from America's biggest car companies. They're calling their competition a clear and present threat. Wow, I mean, those are some heavy words, right? Almost sounds like wartime rhetoric. So you have to ask, what is really going on here? And that really is the big question we're tackling here. Why would America's biggest automakers spend millions and millions of dollars trying to lobby their competition right out of the market? Is this really about protecting national security? Or is there something else going on under the hood? Okay, so to really get this, we've got to break down Goliath's political attack. First things first, we need to know who the players are. Who exactly is this Goliath, and what's driving them to make such a massive, aggressive move? So this Goliath, it's actually a group called the Alliance for Automotive Innovation. And you can basically think of them as the voice of old school legacy auto in Washington, D.C. And we're not talking small fries here. The key members are the absolute giants: GM, Ford, Toyota, all of them pooling their massive resources for this one big fight. All right, but here's where it gets really interesting. This is the big twist. Instead of seeing this attack as a bad thing, we're going to reframe it completely. Because when you dig into it, this whole lobbying campaign, it's actually the ultimate compliment. It's a huge, if unintentional, sign of NIO's strength. And this slide just lays it out perfectly. On the one hand, here's what they say the problem is: a national security threat. But then you look at the real reason, and it's a balance sheet threat. See the difference? This isn't really about protecting the country. It's about protecting their own profits from a competitor that's just, well, beating them. And look, here's the bottom line. These legacy car companies are publicly admitting they are losing billions of dollars trying to make EVs. They just haven't figured out how to do it profitably. They haven't cracked the code. So, when you can't build a better car, when you can't compete with technology, what's your only move left? You try to build a moat with politics instead. And that brings us right back to this idea of the ultimate complement. I mean, think about it for a second. If your competitor is weak, you just ignore them, right? You let them fail all on their own. You only spend millions and millions of dollars on a massive lobbying campaign to shut down a rival when you know deep down that they are fundamentally better than you are. So this attack, it's basically an involuntary multi-million-dollar stamp of approval on NIO's tech. But this whole thing creates a much, much bigger risk. Because if this lobbying actually works, it could have this really chilling, totally unintended consequence for the entire country. Something called the Havana effect. And the Havana effect is such a perfect way to describe this. You know how after the US embargo, Cuba was basically frozen in time? They're still driving those classic 1950s cars because they couldn't get anything new. Well, that's the risk here. By banning superior, more affordable technology, the US auto market could do the exact same thing to itself, get totally isolated, fall behind, and get stuck with old expensive tech while the rest of the world zooms ahead. So just picture it. For the rest of the world, Europe, Asia, everywhere else, the future is filled with these incredible, affordable, futuristic EVs. And then what about the US? Well, we could be stuck with just a few expensive, clunky domestic EVs and a bunch of old gas cars. The rest of the world innovates, and we just get left in the dust. I mean, it's a really stark contrast and a perfect recipe for just standing still. Okay, so this whole situation forces us to look at the deep, existential crisis that legacy auto is facing. To avoid that Havana effect, they desperately need a solution. And the argument here is that there's really only one way out for them: what's called the inevitable skateboard solution. But first, you have to get why they're in this mess. And it comes down to one big problem: stranded assets. Think about it. Companies like GM and Ford have poured hundreds of billions of dollars into factories that only know how to make old-school gasoline engines. And now, those factories are rapidly becoming worthless. They're like a giant financial anchor, just dragging them down and making it impossible to pivot to electric. So when you see it that way, the path forward for them is pretty much inevitable. Step 1, you struggle and fail to build your own profitable EV. Step 2, you keep bleeding money from all those old, useless factories. So what's step 3? At some point, the only logical move left is to just give up and license a superior EV platform, that skateboard we talked about, from someone like NIO just to stay in the game. So, licensing. That's just about survival. But now we get to the really exciting part of the story, the final piece of the bull case for NIO. We're talking about their hidden battery moat, a massive competitive advantage that, so far, nobody else has been able to copy. And to really wrap your head around just how powerful this moat is, we have to look at a really weird piece of data. One of NIO's key partners in the battery swap business just saw its revenue completely collapse. Now, how in the world could that possibly be a good thing? Yeah, look at that number, a staggering 31.7% drop in revenue for a company called Alton New Energy. They're a third-party battery swap operator that NIO has been backing. Now, on the surface, that looks like an absolute train wreck. But believe it or not, that number is the key to understanding this entire business. And this is what's called the monopoly insight. See, Alton's struggles, they're actually an amazing sign for NIO. Why? Because it proves just how brutally difficult and crazy expensive this battery swap business is. The barrier to entry isn't just high, it's like a fortress wall. If it were easy, everybody would be doing it. The fact that it's so hard means all the potential competitors are washing out, clearing the entire field for the one company that has the cash and the will to dominate, NIO. So right now, we're in phase 1, and it's all about brute force. Running thousands of these swap stations is incredibly expensive, mostly because you need people there 24/7. So on the balance sheet, it's a huge but necessary cost. But all the money NIO is pouring into automation, that's designed to kick off phase 2. The end game here isn't just to make the stations a little better, it's to make them completely autonomous, unmanned. And that single move flips the entire business model on its head. The network transforms from this expensive liability into a pure profit machine. It's basically a network of thousands of vending machines just prinking money around the clock with almost zero labor cost. It's incredible. So when you put it all together, it leaves us with one big final question. Is Wall Street so focused on the short-term noise, the political attacks, the lobbying, that it's completely missing the real story here, the possible creation of the next great infrastructure monopoly hiding in plain sight?